G'day traders, 1 minute mindset reset. Today we're talking about slow and steady wins the race. So another excellent day of short-term opportunities. We've got very uncertain markets. We've got the bank crisis happening, and as I mentioned in pretty much every video, whenever a session starts, we're inside of a $1 box, a 100 pip box, whatever you want to call it. And price is inside of that 100 pip box, and everything is timed and measured. So we've got macro trades, we've got the high of week, low of week opportunities, but we also have opportunities on certain markets that have the volatility that will move, you know, $1, $2, but everything is timed. So you have to be thinking for 1 hour, 2 hour, 3 hours. When we get breakouts of hourly highs and lows at the specific timings. New York Open, for example, gold breaks out of the high of the first hour. New York opens at the high of a 00 box, just like we've talked about. Same trade 3 days in a row, straight down 50 pips. But it takes out the low of the first hour. Breakout traders were trapped. The third hour now squeezes inside of that low and goes back up inside of shorts from the New York Open. They've already triggered the low of the first hour. The hourly trader's already in, but now in that third hour, we have a peak formation that is now starting the new 4-hour cycle. It rolls over from 00s, goes vertical through the low, and straight down into the higher level longs from the London Gap. Oil, same thing. Second hour breaks the low of the first hour. Third hour breaks the low of the second hour and pulls back inside of the second hour, squeezes into the quarter level down at the bottom of the $1 box inside of the low of the week for an explosive short squeeze exactly 45 minutes into the third hour. So you have to understand the levels, the timings, and who is in the market. We keep saying this over and over again. Most breakouts fail. So you have to go back and you have to pay attention when you're in that timing window. Who's in the market? Where's the underlying bias? Are they making you sell down lower? If it's a sell trade and you're down low, nail and bail. Grab the money and run. If you're sitting for the reversal, then pay attention to time and who's getting triggered into the market when those new cycles begin. The new hour, the new 4-hour. The third hour for oil is the beginning also of the new 4-hour cycle. So you have to understand, once they break that low, the 4-hour guy's in now. So very important. So you don't need to put 4-hour charts up or anything else. My window is right in that 3-hour window. I like to look for shorts. So guess what? When I get a shorting opportunity and they're going back down towards the low of the week, remember, where are the targets? Where is the money? The breakout levels and the previous day's highs and lows. So if they've broken out of a previous day's low, the previous day's low is a target on the upside. But if they put a high of day in and trade back up to it and it fails, that's our new high of day. High of day to low of week. High of session to low of the day. Whatever that may be. But it's all timed and measured. Take the trade. If it's again, size is relative to your account. Slow and steady wins the race. Bat for singles. When you get your 5-star opportunities, as I said, I'll go 25-30% max size on a trade. When I get 5-star, I'm going to go 100% full size. My max stop out is 1 day's income, because if I get stopped out and take a day's loss, I can still end the week green. That's how confident I am in my setups. And also, I'm not hesitating to hit the trade and take the money off the table. And when I'm done, I don't sit around trying to give it back or get more. I'm done. That's it. Trade's over. I got peace of mind. I get on with my day. I could sit there and, you know, buy the low and get back in. But guess what happens? Guess what happens over time to most traders when they start doing that? They end up giving it back. I don't care. There's so many people, they tell me, oh yeah, I got this, I got that, but eventually it catches up. Stick to your routine, master the process, hit for singles when you get your 5-star opportunities for the home run, put size on it, take the money off the table, get on with your day, keep it simple, keep it rinse and repeat, and may the markets go with you. Have a great day, traders.